So we're going to do a real quick round of identifying some of the most
Right.
popular or most well-known factors. There are a lot of factors that we just can't quantify
Yeah.
or it's not
Right.
investable. But anyways, we talked about value. Can you be very clear on what value means?
Yeah. Probably it's looking at things like price to earnings and price to book, price to sales, some combination of those metrics would be often what would define value.
And then we talked about momentum.
Yes.
And you're saying basically going backwards to see how it has continued to do well if it has done well. So if
Correct.
it did well today is more likely to do well tomorrow. That kind of a
Right.
momentum.
Correct.
And in your way of thinking is the other end is if they didn't do well, they may end up doing well. So let's not
Exactly.
discount that side
Yeah.
either,
Yep. This mean reversion that can happen.
right? Right. So in many ways, some value discussion also bleeds into quality.
It is.
Can you help us to understand how we think about quality and how we think about quality somewhat differently than value, even though there may be some.
Yeah, because I think that you might say they're certainly maybe they're siblings, but they're not twins or they're
Yeah.
cousins. There's a lot of similarity that you'd see there. But what quality is attempting to do, and this is maybe where you see different financial institutions might have different definitions, but looking at things like return on equity, accruals ratios, ways to get at earnings, and start to see, can we differentiate between those earnings. There's firms that I think have done interesting things with free cash flow yield. Different ways to say it's not just looking at your earnings, but are there other ways for us to dissect them or categorize them in a way that is repeatable, but to be able to favor one or the other. Again, maybe it's financial leverage that gets introduced as a way to look at a company, in addition to just things like return on equity and an accruals ratio or free cash flow yield. But you can certainly see some similarities with value, but there's been, particularly when there was such a significant season of underperformance of pure value, there was a tremendous effort to say, well, let's look at quality. Let's expand that view to not just looking at things that are undervalued, but let's look at the financial profile of a company and see if we can identify higher quality, of the fundamentals of that company.
So you can actually have a lot of not a lot, there are crossover between low volatility, value, quality,
Quality,
that kind
yeah,
of thing. And then
correct,
on the other side, growth and
correct.
momentum, we have a lot of
A lot of
similarity,
overlap, right?
right? And then let me just throw in ESG, which I was told that Larry Fink no longer used that term. But let's talk about E being environmental, sustainability, and governance. And governance has something to do with quality. I assume that you want a company that's governed well and
Right,
think about their employees, all the things that are
right,
related to governance.
right,
So there are many lenses, right, that you can look
correct.
at a company, and it's almost a proprietary weighting of what sub factors within that factor you feel as a manager more important
Right.
over a period of time. Is that a
Correct.
fair way of thinking
That's
about
a great way to think about it. That it's important to understand the definitions that are being used to measure, certain factors. And as you know, the further we get away from maybe these four or five very traditional factors, so to speak, the more difference and we're going to see in people's definition. And again, their proprietary view of this is what matters more or matters less, once we kind of diverge away from some of those very traditional factors.